an adoption of the 2025 budget and to certify the tax levy. And the history on this is on or before November 1, the Board of Education must adopt a 2025-26 budget and certify the associated tax levy. The budget booklet displaying the proposed adopted budget and associated tax levies included in our packets tonight. Within the booklet is a summary of changes between the preliminary budget and proposed adoption budget, and Erin is going to carry us through this whole understanding.
Yes. So we finally have all the information in for quite a few months now saying, hey, we have estimates. We're kind of waiting for all the moving pieces and information. So tonight's the night. We have it all. Our last piece of information we were waiting for was the October 15th state aid equalization. Along with that came some voucher FTE and some other dollars too. So tonight we are at that last point of adopting our budget with a third of a year almost completed from a fiscal year standpoint. So we're going to start out talking about our revenue limit authority, which is really the maximum amount a district can raise between either state aid and or property taxes. So we're going to talk about the key components that made up our almost $112 million adopted budget for revenue limit authority. So the biggest bump you're seeing in here is a blue, which is year 3 of our operating referendum. The red was a base from the prior year with the increase, plus a little bit decrease for our exemptions, both recurring and non-recurring. So really our 3 factors that are building that revenue limit authority is our 3-year membership rolling average, any increase in per pupil defined in our state budget or state statute, and exemptions, whether they're reoccurring or non-reoccurring. So this is one of the slides in the adopted budget packet that you have with you. The biggest factors we talked about last finance meeting when we were together was the slight increase in our projected numbers for where we landed for third Friday count, which ultimately played into kind of a slight increase in our 3-year average for our membership. We also had some exemptions for transfer of service, as well as prior year open enrollment, and then also our vouchers that we'll get into in a little bit. The last one on here, declining enrollment exemption, because our 3-year rolling average is declining, the state gives us some one-time revenue as an exemption to help get us through this year, and then that falls off the following year. So as I mentioned, that our membership, that 3-year average, while we're slowly chipping away at our declining enrollment exemption, we still are in that. Based on our 3-year rolling average. So we are still down about 68 students for that 3-year average, which is equating to just over $850,000 in declining enrollment exemption that we receive. The second factor is any state per pupil amount. So as we've talked about, the biennium budget, we did receive the $325 in the 23-25 biennium budget that carried forward. That equated to just under $2.3 million revenue limit authority increase. That is truly an increase in spendable dollars. It's just where those are funded from is what we'll be talking about here in a little bit. Last but not least, again, kind of a key factor is exemptions. Talked about the declining enrollment exemption, a voucher exemption, but we also have year 3, that $5.6 million number of our operating referendum that was approved back in November of 2022. So talking about vouchers, over the last few years, this has been a conversation and topic bringing to the board and our community's attention that we receive a reduction in our state aid to help support voucher schools, which means then the state says you can now add an exemption on your revenue limit to ultimately tax your taxpayers to help for the reduction in state aid you're seeing. So while we assumed that we were actually going to be increasing in our voucher FTE, that didn't actually play out. However, when we look at, there's a lot of numbers on this slide, but I'll have you focus on even though in 25-26 we actually saw a slight decrease in the voucher FTE between all of those different programs and opportunities, we're actually seeing an increase in our budget because of the increase in the tuition amount that vouchers received going into the 25-27 biennium budget. So again, sort of the highlight being we kind of projected a budget increase assuming that was following FTE. However, what ultimately shook out is we actually saw a decrease in FTE with a pretty significant increase in the binding budget for tuition vouchers. So we have about a $1.4 million exemption for our vouchers that we will see as an expense, and the 1.2 is a decrease in our state aid. So all of those key factors build our revenue limit authority, build that $112 million. And what was unexpected was, now that we know how much a revenue limit authority, how much is property tax versus how much is coming from the state. During the state binding budget, there was no increase in equalization aid, which we have talked about. That was pretty unexpected for our districts. 71% of districts, us being one of them, will actually see a decrease this year in the amount of equalization aid than from the prior year. So we know this is impacting our community in the terms of property tax, of shifting that to them, because we are not seeing an increase in our equalization aid. Sort of a second factor of that increase in the 325 for per pupil revenue limit, so about that $2.3 million, is a spendable increase that did grow our revenue limit authority. However, with the absence of the general aid increase, we didn't see any of that absorbed by state aid. So again, all of that is also shifting to property taxes going into this school year. So talking about our equalization aid, we knew we were going to see a bit of a decrease. However, because we saw significantly more of a decrease, us along with many other school districts, as I just shared, we actually fell into what they call hold harmless or special aid adjustment. So beyond the $4.2 million that you see here is that number, which is technically supposed to be a 15% cap, we actually are getting a special aid adjustment of just shy of $4 million as well. So we could have seen more like an $8 million decrease in our property taxes without that state statute of holding us at 15%. So while we see a little bit of a decrease, is because of an aid adjustment that happened in a prior year that doesn't go into the calculation. So we see that we had this year, anticipating that this is going to be our reality for the next, or year two of the biennium budget, unfortunately. So how kind of all that ties together is we have our revenue limit authority, and now we have to determine how it's distributed between our property taxpayers and what we're getting in state. So what you can see is over the last couple of years, we are held pretty steady of what we are getting for state aid. This year, we see that about $4 million decrease in aid, while we're also increasing our spendable revenue limit authority. So you see that blue bar getting bigger, which is now then shifted to property tax burden. So with all those moving pieces, so our revenue limit authority is some of our tax levy, but on top of that, we also have our long-term debt as well as our community service. So our total levy for the 25-26 school year will be just over that $101 million, which is just over a 10% increase from the prior year. And the last factor we need to determine how that impacts our property taxes is sort of the distribution across our 8 municipalities. While collectively we look like we had a statewide average of 8%, we were just under that at 7%. 5 of our 8 municipalities actually saw an increase above the statewide average, as you can see listed in the graph on the screen and in the packet. We also saw a bit of a change in our distribution, which typically happens from year to year, but we saw a pretty significant decrease in City of Middleton, which then means the other municipalities pick up sort of that share of the overall bucket of our property valuation, with the biggest increases seen in the town of Springfield and the city of Madison, picking up sort of that share of redistribution between our 8 municipalities. So all of those moving pieces together give us our total tax levy and then ultimately our mill rate at 8.62, which is just over a 3.5% increase from the prior year. But really kind of talking about both the equalized value or property tax increases continue to go up for property value, which the district is not, that is not something the district determines, along with our tax levy and then ultimately our mill rate. As we have talked about in prior years, really highlighting sort of the impact that the public schools are receiving in a reduction of state aid impacts the revenue limit exemption. So about 10 cents of our mill rate is specifically for that voucher exemption of property tax impact because of the reduction in state aid that we receive. And ultimately, how this shakes out, so when we look at across all of our municipalities, this is not specifically one municipality, this is sort of the average across. All of our municipalities have taken, if we felt the 7% minus a 1.7 for net average new construction, these are sort of the increases we would see in a property home value and what the impact would be for our mill rate. So that $300,000 become just over a $315,000 property value. That increase would be about $228 for that property taxpayer. Of that, we knew that this was year 3 of our operating referendum, so we were going to feel closer to $118, $123 for just our operating referendum. However, we know the rest of that is because of the impact the state biennium had with the no increase in equalization aid and the additional spendable revenue authority that we had. So lastly, now that we know what our revenue limit authority is, we know how we can finalize our adopted budget. Sort of the highlights across our budget that we have been talking about for months now has been our year 3 decrease in state aid. We know that we have our increase in special education aid that did come and play a factor of our state aid, even though it looks like we're getting a decrease collectively, that didn't overall increase the amount that we got from the state, even with that bump in special education aid. We knew we were seeing the end of our ESSER funding last year, which is where you're seeing the big decreases in revenue there, and also an increase in the open enrollment in tuition from the seats that we added this school year. And on the expense side, increases in our salary and benefit packages, as well as decreases for our sustainability phase 1 last year, open enrollment, out tuition increases. We know, again, the ESSER funding, and some new fleet or replacements for our fleet and transportation is rounding out our adapted budget on the expense side. So having a balanced budget for both the revenue and expense side for our adapted budget, the action proposed tonight is approving our 25-26 adopted budget and certifying the levy of that $101,150,743. Any questions?
Well, you made that very simple.
A lot of months prepping and having conversations with you all to lead to this point, so.
Nobody thinks of this as simple.
Of course not.
I do
Well,
have
maybe a
question.
couple, but not any of us at this table. Questions?
Yes, sorry, page 18, or slide 18.
Okay.
It's got the percentages and equalized value on the different municipalities within our district. You went over that super quickly, but I do want to say for the public, where do you get those percentage numbers, and do we come up with them, or does somebody else do that?
Somebody else says that. We just received that information. So in August, the municipalities received the information of their property value increase by municipality, and then by the beginning of October, we receive it by school district, but we do not determine people's property valuations. That is set at the municipality level.
So we love Springfield a lot right now. And we're very sorry that you went up 19.56%, but yay.
That's Town of Middleton. Yeah, they saw a pretty significant increase. My assumption is with some of the higher increases has been probably a reassessment of those municipalities. So when you hit a certain threshold, the municipality has to do a reassessment of your property. So my guess is in some of those municipalities, they probably hit that threshold to then do a reassessment, which is making those increases. So I know our municipalities, or the ones that I'm aware of, tend to send out communication, hey, we did a reassessment, here's how that impacts your, your future property tax bills. So hopefully people are getting those from the municipalities, but the school district does not determine property valuation.
Yeah, I do know that that's different for every municipality, because some of them do them really regularly, like Madison. Madison does theirs every single year. It's so kind of them. But I do know some of the smaller ones probably don't do them as often. Thank you.
Yeah.
Is some of that percentage change also a reflection of building in that area?
Some of it will be, so some of it is for the increase in the new construction that we're seeing. So when we have looked historically at our sort of property tax comparison of how is that going to impact sort of our estimate of our property tax bills, we take that into consideration that when you have new growth in your community, we saw that 1% 1.7% increase of average net new construction means that that new property is now taking on some of that levy or that property tax burden because they're new, but they also are adding to the valuation, obviously overall, of new property value in those communities. So yes, there is definitely some of that, but about 1.7%.
Interesting.
Yeah, overall.
Any other questions? If no further questions, I'll be looking for a motion to adopt the 2025-2026 budget for Middleton-Cross Plains Area School District as proposed and certify the tax levy in the amount of $101,150,743.
So moved.
Second.
Okay, we have a motion, and we have a second. Is there any further discussion? Hearing none. All in favor, say aye.
Aye.
Opposed? Motion passes.
Of course, tap through.
Thank you, Aaron. That was
Strategic.
a lot of information and explained well. Thank you so much.